On today's episode, we are going to take a look at Chinese stocks. Most of them are down today. Some of them are down double digits. So in today's episode, we're going to start off taking a look at what exactly is happening in the market. Then I want to just share my overall thoughts to see how I invest during situations like this. I do have some positions in Chinese companies. So what is my mental process right now? Let's get started. So first, let's really understand, right? US listed shares on China companies drop on fears of more crackdowns. If we take a quick look here, we have Didi down 20% today. YMM, which is Full Truck Alliance, is down 16% today. BC, right, Kasoon Limited, it is down 13.5%. We have even big companies like Doyu down 13.4%. JD is down 4%. Baba is down 3%. Huya is down about 0.6%. We're going to talk about Doyu and Huya Merger in a bit. But then we also have PDD down 4.87%. So first, let's try to understand the first three and the ones that are down the biggest: Didi, YM, and BC, which is Kasoon Limited and Full Truck Alliance. These are recent IPOs. And this is normally one thing I'm not a fan of doing, even here in America and in the United States. Only if I'm very, very, very bullish or have high conviction in a business will I ever enter during IPO phases. The main reason is there is this crackdown in China. China has kind of blocked, and I talked about this in yesterday's episode where I took a look at BC. Chinese governments blocked the company's apps. This is right now talking about Didi. They blocked the company's app from being downloaded. This breakdown is also happening in other stocks. I know it's happening on Kasoon. China came out and said, hey, you can't have any new downloads on your application right now, shutting down, but the current users can still use the applications. But before we take a look at what happened, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. This is really very scary for investors, right? I mean, if you are a company that deals with most of your revenue coming from an application due to advertisement, or if that's your main product, obviously seeing a crackdown or a pause in new subscription is a horrible thing. Main reason these stocks have plummeted double digits, right? I mean, especially since there is no timeline at the moment. There's no timeline at the moment of when they will return or if they will ever return, right? If, for example, the overall, if the Chinese cybersecurity government says, hey, this whatever's supposed to happen right now, we don't like. You're going to have to make some changes, and these changes, who knows, may make some differential changes in the overall way the company makes revenue. So it's understandable why investors are a bit worried right now. I do want to say, though, like anything else, the media kind of amplifies this noise, right? It kind of amplifies this fear. I feel like everything right now, that's why we're really big in red, especially a lot of these big companies out there, like I mentioned, right? Like Baba is down 3%, JD is down 4.2%. So right now, it's not really affecting them. It seems to really be affecting the new companies out there, the new public companies. But you see some of these big players still getting hit. And I do believe that's just the overall effect of just a push from media to try to really promote this fear. At the same time, it's understandable, right? And we're going to talk about what I do normally during times like this. But again, right, I mean, there's plenty of investors that don't invest in Chinese companies, and this is the reason, right? Concerns about Chinese stocks in general has been here for multiple years. Many people have said it started due to the last presidency, but even before that, right, I've been investing before that. There has always been this fear or these concerns about investing in Chinese stocks. So it's not something that's recent. And we can see, right, there's many investors right now that don't invest in any these shares. Another thing I want to mention is Huya and Doyu, completely off topic from this crackdown, but the antitrust, they were supposed to merge. China's antitrust watchdog right now, there are some sources familiar with the matter that said this merger is going to be blocked. I do believe that's a main reason Doyu is down right now, or Doji, I'm pretty sure I'm butchering the name. That stock price is down 13%. And we can see, right, Doyu is down more than Huya, even though the merger affects both of them. Huya is a bigger company, and normally the merger is in theory better for the smaller company. So Doyu was the smaller company, so in theory it was better for that merger to happen. Now that it's not happening, some investors are more worried about Doyu than Huya. I do have Huya in my portfolio. All right, so now that we talked about what's happening in the market, let's just share my overall thoughts. Will I stop investing in the overall Chinese market? No, I actually won't, but I will continue to do what I have always done. The first thing is, I understand the risk, right? I understand that there is this increased risk of government, especially in China, right? With the heavy government cracking down on techs and stuff like that, that any one of my positions will never be a really, really big position. Like I have tier 1 stocks in my portfolio that are American based, that are over 10% or close to 10% in my portfolio. I don't think a Chinese company will, or even an internet, maybe a Chinese company won't be 5, maybe even 6% of a position ever. That's just how I would deal it. Maybe if it does through gains, but it will never start off as a 5%. I don't think I will continue not to do IPOs, especially since IPOs are the biggest ones that I've seen get hit the hardest with either fraud or, like we see today, the 3 companies that are kind of being prevented from this application or kind of being halted from their applications being downloaded are recent IPOs. So no IPOs, mainly focus on the big names. For me, for example, JD is a big name. Some investors might consider Baba. And overall, just no overexposure. Even if I have multiple positions in Chinese stocks, all those stocks added together will never be a big position in my portfolio either. So again, I limit my risk because there's risk. We see it perfectly today. But at the same time, I don't mind having that risk if I believe the company can do well in the future. And at the same time, whatever my risk tolerance is, might not be the same for you. So if you were not kind of comfortable investing in Chinese stocks before, just because I like them doesn't mean you should like them, right? Every investor has different risk tolerance. Every investor should listen to what their tolerance tells them. So those are my overall thoughts, guys. I hope you guys enjoy it. Really much what's happening in the Chinese market right now. So take care, have a good day, and see you next time.